Welcome, everyone, to a few tax compliance tips. Our focus today is on chapters and AVCs that are currently recognized by the IRS as tax exempt. If the IRS has revoked your chapter or AVC's tax exempt status, we'll give you some tips about that too. I'd like to introduce my partner for today's call, Steve Channels. He hails from our Connecticut Alpha chapter at the University of Connecticut and is a longtime SIGEP volunteer and recipient of the Distinguished Alumnus Award. He's both a CPA and a lawyer. Thanks for joining us, Steve.
Thanks, Chuck. Chuck Stegman is from our Colorado Alpha chapter at the University of Colorado and is also a longtime SIGEP volunteer and recipient of SIGEP's Exemplary Service Award. He currently serves as chair of the SIGEP Chapter Finance and Compliance Committee.
The tax concepts most chapters and AVCs face are pretty simple, but the terminology is new to most of us. We're going to demystify some of the key lingo you'll encounter. Let's start with the first couple of terms. Steve, what do nonprofit and tax exempt mean?
Well, Chuck, the term nonprofit relates to certain state law requirements when a corporation is formed, and those requirements will vary from state to state. Tax exempt, on the other hand, is a status created under federal law and granted to an organization by the IRS, and perhaps also separately by a corresponding state agency. Here, it's important to understand the difference between AVCs and chapters. AVCs are corporations created by filing articles of incorporation with the state. The chapters, on the other hand, are not corporations. They are unincorporated associations created by the issuance of its charter. The concept of unincorporated associations is a legal one beyond the scope of our discussion today. But the important takeaway here is that AVCs are distinct from chapters, and each has its own tax compliance obligations. They can't file a combined tax return, and one can't file a tax return for the other.
Being tax exempt is important. Why pay 21% federal taxes each year if you don't have to? But Steve, how do we maintain tax exempt status with the IRS?
Well, even though an AVC or a chapter may not owe any taxes, every chapter in AVC still has a reporting obligation. That means they must file their own Form 990 with the IRS every year. If they don't file Form 990 for 3 years in a row, the exemption is automatically revoked.
Right. Don't skip filing. Don't leave it to the next guy. You can save your chapter or AVC significant money and headaches by going this properly. If your tax exempt status is revoked, you may have to pay taxes until you get reinstated, plus penalties, plus interest. That can add up to big numbers very quickly, so don't go there. There are different versions of the Form 990, right, Steve?
Indeed, there are. The amount of revenue and assets of the entity will determine which one they file. The simplest one, 990N, is crazy easy. It's a half page that only asks for basic identifying information and confirmation that annual income was less than $50,000. It's submitted electronically and there are no paper forms. The next one, 990EZ, is only 4 pages and requires the disclosure of some basic financial information and the answers to a series of questions. The full 990 is longer and requires more information, but most chapters and AVCs won't be filing that one anyway.
And Greekbill has a tax wizard that can help a chapter or AVC determine the right form to file. If that form is the 990N, the easy one, or the 990EZ, which is also pretty easy, it will walk you through filing. If the form you need to file is the full 990, the Greekbill CPA can help you file it for a discounted hourly rate. So, Steve, when is this mandatory annual filing of Form 990 due?
Yeah, the due date is the 15th day of the 5th month after the fiscal year end. For those not familiar with that term, a fiscal year is an accounting period selected by the organization. It's an election usually in the organization's first year and has to be followed consistently after that from year to year. The fiscal year end for most SIGEP chapters will be June 30th, and thus the due date for their Form 990 will be November 15th. but they can file at any time after their year end or June 30th. So don't procrastinate.
So where does a VPF or an AVC treasurer start?
Well, the first stop should be the most recent tax filing. Form 990s are public documents and are published on the IRS website. They'll need their federal tax ID, also known as an employer identification number or EIN. VPF should be able to find their chapter's EIN in their MySigEP chapter profile. Then use the EIN to search the IRS website to see past filings where they can find a lot of useful information, such as when their fiscal year ends. If they need help understanding what they see there, they can ask around the AVC. And if that doesn't help, they can email you at sigepfincomp@gmail.com.
Being tax exempt means you don't pay taxes on income, but is there an exception to that?
Yeah, there is. The tax exemption is for income from members. It is not an exemption from taxation on what is known as unrelated business income, or UBI, which likely is taxable income. UBI is an area that's a bit more technical than the other ones we've been discussing. So AVCs and chapters should be careful with this one and get professional advice. But in short, if they have income of at least $1,000 from sources other than their members, that income may be UBI, and they'll need to file an additional Form 990T in addition to the Form 990, and also pay taxes on that UBI. That's a little outside the scope of what we can cover today, but they can talk to their accountant or check out the SIGEP taxes FAQ on the VP of Finance page for more information.
And Steve, aren't there different kinds of exempt status?
Yeah, there are. The different types of exempt status are defined in Section 501C of the Internal Revenue Code. For chapters and AVCs, Section 501C7 is the relevant one. 501C3 is for traditional charities. Chapters and AVCs do not qualify for 501C3 status. The distinction is important because contributions to 501C3 organizations are tax deductible to the donor, but that's not the case for chapters and AVCs. Donations to chapters and AVCs or any other 501c7 organization are not tax deductible by the donor, and they should explicitly say that in any solicitation or thank you correspondence confirming a donation. If they want to have alumni donate to the chapter of the AVC and get a tax deduction for it, they can work with the SIGEP Educational Foundation, which is a 501c3 organization and exists for this reason, among others.
What about sales tax?
Yeah, the 501c7 tax exemption, keep in mind, that's for federal income tax purposes. Chapters and AVCs may still need to pay sales tax, but that's a function of state law. So that result will depend on the state in which they're located.
Are there similar state requirements or other taxes to be considered?
Possibly. They should check with their local and state governments about filing requirements. Not all state or local governments have such requirements, but many do. Just like many individuals have to file federal, state, and local tax returns, the AVC or chapter may as well. Also, if a chapter or AVC has employees, employment taxes must be withheld and paid and related tax forms filed.
To recap, an AVC or chapter can be exempt from paying federal taxes as 501c7 organizations. They do not qualify as 501c3 organizations, and each must file their own mandatory annual Form 990 in order to maintain that tax exemption. Greek bill can help, but however you do it, it must be done each year, and please send a copy to headquarters. If you get stuck, reach out for help, but it must be done each year. If you lose your exempt status, you must reapply. The process is fairly easy, and Greek bill can help with that too. Thanks, Steve, and thanks to our listeners. It's a great day to be a SIGEP.